Hey, what's up, my friend? So, in today's episode, I want to talk about what is the easiest way to grow a small trading account. Are you ready for it? And the answer is simple, really. The easiest way is to risk 100% of your trading account. So, if you have $1,000 trading account, you bet $1,000 on each trade, because if you just achieve, let's say, a 1-to-1 risk to reward ratio on your trade, guess what? You just double the size of your trading account, just like that. That's it. Easy, fast. But there's always a but, isn't it? What's the downside? Well, it's this. Is it feasible? Is this approach feasible? So yes, right, you can double your trading account in one trade, or maybe even, in half a day. But is this something that you can do consistently over the next 10, 20, 30 years? And the answer is no, because it's a matter of time, I guarantee you, before you hit a losing trade, or a series of losing trade, and you lose everything and more. So clearly, right, growing a small trading account quickly and easily can be done. But the feasibility is a different story. And this is something that every trader must consider. I've read, comments on some of my YouTube videos where someone said, trading FX is boring, on a $500 account, it takes forever to grow it, whereas you can trade some penny stocks and then 500 turn to, 3,000-4,000 within, a few days. Yes, that's possible. In fact, FX is possible as well. But again, feasible. Is this something that you can be doing for the next 10, 20, 30 years? So that's a question you have to ask yourself. I do not know what's your goal in trading. Some of you might be doing it for the excitement. It's thrilling, right? Trying to beat your record, how fast you can, turn the account around to make triple-digit returns. But some of you are more serious about this, and you want this to be something that can last for the next few decades. And if you're looking at trading as something that will last a few decades, then you have to consider the feasibility portion. You can't be betting the farm on every trade. All right? So now, what's the solution? I mean, if you have a small trading account, so what's the solution to growing it without blowing it up? And few things to bear in mind. Number one, you got to manage your risk. You can't be betting 50%, 100% of your account on each trade, because it's a matter of time before you lose it all. So you have to dial down your risk, right, to be risking like 1% of your account on each trade. And now some of you might be thinking, but Rainer, 1% of my account on each trade, if I get a 1-to-2 risk reward ratio, Rainer, that's only a 2% gain. Yes, I know 2% might sound little, right? But it's all about perspective, and I'll talk more about that later on. But yes, I agree. 2% may not seem a lot, but when you compound it, right, that little tiny bit of return, right, can snowball into something big in the future. And that's why, I bring up again, right, what are you looking for in trading? Are you looking for something, fast and crazy, or something that is, slow and steady? Longevity, or, are you looking for marriage, or are you looking for one night stand? That's my question to you. You get my point, okay? So number one, you have to manage your risk. Right, you gotta forget about the the excitement, the doubling, tripling of your account within a few days. Forget all of that stuff, because if you want this for the long term, if you want a lady, a wife that you want to marry for the long term, you gotta take it slow and steady. You don't marry someone on the first date. Do you agree? Okay, so that's the first thing, risk management. Second thing you need to do is you gotta add funds regularly to your trading account. So let's bring back to a $1,000 trading account example. Now, some of you might think $1,000 is not even a small account. It might be a huge account, especially for those of you who might be in India, South Africa. Some of the audience are down there, and then some of you might be in the United States or Singapore, where $1,000 is a small account. So I'm just gonna keep things like kind of universal. I just keep things simple. $1,000. It might be big or small to you, right? That's something that it can't be helped. Okay, so if you have $1,000 trading account, and let's say you compound your return for 20 years, and each year you make an average of 20%. At the end of 20 years, that return, right, that $1,000 account will be about $38,000, $337.60. You might be thinking, wow, Rainer, your math is really good. Yeah, that's because I have another screen over here that tells me that figure. Okay, so yeah, it compounds to about $38,000 after 20 years, and having an average return of 20% a year. So now, what if you have that same $1,000 account, but instead of just simply compounding it, right, you add funds to your account every year. Every year you add another $1,000 to that account. So again, same thing, right? $1,000 account that you're starting with, you add on another $1,000 to that account each year, and again it grows by an average of 20% a year, and you compound it for 20 years. How much would that be worth? That would be worth about $262,363.20. $262,363.20. And that's like a lot more than the 38,000 that I just shared with you. And that's all by regularly adding funds to your account. So can you see where I'm coming from? If you want to grow a small account, yes, you can compound it, but if you want to put steroids into your compound effect, right, add funds regularly to your account, right, every half a year, every year, whatever, you're comfortable with. So that's the second tip I have for you. And the third and final tip that I have for you is that you have to think long term. You have to think far. And the reason for this is that just look around you, right? If you want to be a doctor, you want to be a neurosurgeon, you don't become one after taking a weekend course or seminar. You probably study medicine for like 5 or 6 years. You go to the hospital, you be an intern, you be a resident, a few years under someone's apprenticeship, and then finally after 10, 15 years, you become a neurosurgeon. Or if you want to be like let's say a top salesperson in your company, you go through their training, you learn the products for the first few years, after which you learn about human psychology, persuasion, maybe after 5, 6 years, you become a really good salesperson. No one gets good, no one gets great straight out of the door. Or how about the Olympic athletes, right? Those 100 meters sprinters, 200 meters. They don't just take up a weekend training, a year training, and they just get good at it. They spend their entire life, right, just for that Olympics, which occur once every 4 years. They probably has 15 years of 20 years of preparation. And people come into trading and they just think that straight off the gate, right, they're just going to be the best out there. They're going to make profits consistently from the market. So clearly, expectations, right, is quite wrong, right, in this retail trading arena. Many people just get their hopes high. They get sold by all the latest marketing gimmicks and whatsoever and think that this is something that they can get really good, within a short period of time. It's not going to happen. And really, if anything that's worth achieving, right, takes time, right? Like the examples I just shared with you. And another thing that I also want to share with you is that as you get better, as you get more proficient, the competition gets lesser. What do I mean by this? And it's very simple, really. If you think about this, Usain Bolt, right? He used to be, the top runner in the world. Do you think that he has any competition around him? Right? No, because when you are the best, there's pretty much no competition because you're already the best. So what I'm trying to say is that as a newbie, right, as a beginner, there's a lot of competition. There's a lot of people trying to get into this, this new, this scheme, this hype, this whatever. And many of them, right, will just die out like flies, right? They'll just give up because the first obstacle is in their face. They give up, they quit. And those that progressively go up higher in the ladder of the scale, right, the competition gets lesser and lesser because more people leave the business. And when there's lesser competition and when you're kind of near the top, right, that's where you really will start gaining market share and make more money in the long run. And it's the same concept as trading. The first, or rather, you just look at trading beginners, those with less than 1 year trading experience. That is the most number of traders out there, right? Because everybody's all hyped up, everybody want to quit their full-time job, they want to trade full-time. And, a lot of people are in this, so-called category in this stage. But as you keep in this business for a few years, the competition gets lesser because most who got started have already quit by then, right? And at this point, right, you will face, so-called less competition because you get more proficient. You understand, what it takes to be a consistently profitable trader, right? You can, profit from, the losing traders who make the mistakes and stuff like that. So competition gets lesser, right, as you become more proficient. Doesn't matter whether it's, in athlete, whether it's in business and stuff like that. The better you get, right, the weaker the competition gets because you are getting stronger. Okay, so same thing for trading, right? If you want to get better at trading, you got to put in time, you got to think long term. Okay, there is no shortcuts over here, right? There is shortcuts, but it always comes with a cost. And can you justify the cost? And I'm guessing most of the time you will not be able to justify the cost. All right, so really, right, that's all I want to share with you in today's episode. Hope you got something out of it. And with that said, let's do a quick recap, right? First thing first, right? You can easily grow a small account, but the risk is that you will lose everything and more. So feasibility-wise, you have to consider about that. Second thing, to grow a small account responsibly and steadily, you got to risk a fraction of your account on each trade. Like 1% on each trade. Yes, I know it's not a lot, but manage your expectations, right? The higher up you go, right, the lesser competition there is, right? Because you get better, right? You start, getting more proficient, whether it's in business, where you start gaining more market share, or in trading, you start understanding, where traders get trapped and you can profit from them, or you're just gaining more trading experience and skill set to know how you can make money from the markets in different manner. You will get better and the competition will seem, relatively weaker to you. And finally, right, regularly add funds to your trading account because that's how you can, put the compound interest, right, on steroid. just inject with more, whatever steroids there is. Okay, so with that said, I have come to the end of today's episode, and I will talk to you soon.